I asked you guys what you need the most right now in these volatile days and weeks, and your answer was stocks to buy now. So in this video I will show you the stocks that I'm watching and maybe buying when the stock price hit the price target that I have in mind. I'm very excited to see what you guys think about these stocks, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, with the SP 500 being down 18% year to date, I think a lot of investors are in the panic mode. A lot of stocks went down because of disappointing earnings or changed fundamentals, or a weak outlook. Whenever the stock goes up a tiny bit, the next day they will go down again. I selected a list of 4 stocks that are the most interesting in my opinion at current prices. And the first one is Tyson Foods. Tyson Foods is a modern, multinational protein-focused food company producing approximately 20% of the beef, pork and chicken in the US, in addition to a portfolio of foods under multiple brands. This stock is down only 4% year to date, and with the latest earnings they did a great job beating both revenue and EPS. Tyson Foods is a 30 billion market cap company with a PE ratio of just 7.6 and a forward PE ratio of almost 10. Companies like Tyson Foods have lower margins in general. Right now the operating margin is at 11% and profit margin is at 7.5%. But the thing that I do like about Tyson Foods is that the margins are increasing every year, so that comforts me a lot. Return on asset is almost at the minimum of 10%, so I like that also to go up just a little bit. Return on equity is sitting at 21%, which is great. The 12 trailing month revenue is sitting at almost 50 billion, and the quarterly revenue growth year over year is sitting at 23%, which is very nice. In here we see that revenue is going up also quite nice and steady, which is a good thing. On top of that, Tyson Foods is buying back shares, which is also a good thing. This will lead to a higher EPS and it's more easier to maintain the dividends. The last thing that I want to show are the dividends itself. A 2.70% dividend yield, a payout ratio of just 18%, a 5-year growth rate of almost 20% and a 10-year consecutive dividend increase. So this looks all really good to me. Final conclusion, this stock can be put on the buy and watch list in my opinion. I think this stock is also a great defensive play during volatile times like this. The next stock on this list is Stag Industrial, a stock that I didn't talk about for a long time. But at current prices it becomes more and more interesting. Year to date this stock is down 31%, which is quite a lot. The main reason why people like this stock is because of the monthly dividends, which we will cover in a minute. Stag Industrial is a real estate investment trust focused on the acquisition and operation of industrial properties throughout the United States. By targeting this type of property, Stag has developed an investment strategy that helps investors find a powerful balance of income plus growth. In the latest earnings, FFO were in line and EPS and revenue were beaten by Stag Industrial, which is very nice. Revenue is going up quite nice and steady, which is also a good thing, and it's the same thing with the net income. Margins are increasing quite nice and steady again, so this is also a good thing. They will generate more and more profit. When we check the dividend scorecard, we see that Stag has a 4.5% dividend yield and a 5-year dividend growth rate of almost 1%, which isn't the best, to be honest. They grew the dividend for 7 years in a row. The current payout ratio isn't the one you want to use for REITs, since REITs use a FFO payout ratio. Then we see the payout ratio is covered very well at almost 70%, so I think from a dividend perspective, Stag Industrial will be on my watch list, especially since they are down 30% year to date. Third stock on this list is Visa. It's one of my favorite stocks right now and they crushed earnings last month. It's my second largest position right now and I'm planning to buy more shares of Visa this year. The stock has come down 10% year to date, but it has seen the $240 multiple times this year. The thing I like about Visa is that they have a profit margin of 50%, and with the stock price going down quite a lot, the PE ratio is going down as well, sitting at 23 right now, which is a reasonable price for Visa I think. Visa is buying back a lot of shares, which is a great thing. Almost 30% in the last 5 years. This means EPS will go up and dividends are more easier to maintain and increase. And that's all because free cash flow is going up a lot in the past decade, which we see here. They also have enough cash to pay down a big chunk of their total debt, which is also a thing I like to see. And the last thing are the dividends. The dividend yield is only sitting at 0.75%, but payout ratio is sitting at 21%, and the 5-year growth rate is almost at 18%. So you got yourself a big dividend growth stock. At current prices, I think Visa is definitely a stock to add to your watch list. In my opinion, it's a high quality stock that's trading at a reasonable price right now. Last stock on this list isn't really a stock but an ETF, the SP 500. You don't see a lot of YouTubers talk about this, but I think it's a good thing to have an SP 500 ETF in your portfolio. Did you know that only 20% of the investors did beat the market average in the past decades according to multiple researchers? So it's a known fact that the S&P 500 did deliver a 10% annualized return over a longer period of time. And of course, some years were below this 10% and some years were above 10%. But on average, you will get your 10% return. And right now, the S&P 500 is down almost 20% year to date. But when you zoom out and check the 5-year chart, the S&P 500 is up 63% and has gone down multiple times. So maybe it's the best time to buy this ETF right now. It has another great advantage in my opinion, which is diversification. Some people like it, some people don't, but I think with buying the S&P 500 ETF every month, you can't go wrong in the long term. The broker I am using let me buy an ETF every month without paying any fees. So that's also a nice thing that I really like. For now, I'm buying the S&P 500 ETF at current prices, and also because you will get your 10% average annual return over a longer period of time. My final tip is right now, a lot of stocks are down, and many interesting stocks weren't included in this list. But that doesn't mean these stocks are the only ones that are interesting right now. It's always a good thing to have cash on the side to buy stocks during crashes or volatile times like this, because this is where the real money is earned. So good luck, and I hope you all buy some quality stocks during these times. And remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.